Welcome everyone to the very first property investing podcast brought to you by Real Estate Investor. I'm Dennis Wong and I'm the product and training manager, and you may have tuned in before to one of the many webinars that I've hosted. Like our webinars, we want to make these podcasts educational, and the goal is to provide you with valuable content and tips on various property investing topics to help you invest better. For our very first episode, there will be a market update from Dr. Andrew Wilson. I'll provide you with some information on the pros and cons of granny flats and investing in off-the-plan properties. And then finally, a quick update on this month's cash rate announcement. So let's get straight into it. Here is an audio clip from a recent webinar that we hosted with Dr. Andrew Wilson, who is Domain's chief economist, which was in conjunction with Terry Shear, Australia's leading landlord insurance specialist. Now, Dr. Andrew Wilson will provide his thoughts on the housing market as of today, his thoughts on the so-called housing bubble and whether it will actually burst, and also what he thinks about the unit oversupply concerns in Brisbane, Sydney, and Melbourne. Now, for the full 60-minute webinar, you can watch the recording uploaded on our blog, which is blog.realestateinvestor.com.au, or for more information about landlord insurance, you can go to terryshear.com.au. So Dr. Wilson, take it away.
It is an elusive housing bubble that is sought everywhere. And as I said, the reality is that our housing markets are remarkably robust and resilient. The risks to our housing market clearly are higher interest rates. But even with higher interest rates, we tend to see an orderly direction phase as interest rates rise. Now, the prospect of higher interest rates are becoming more and more fanciful. Even the sort of interest rate rises we'd need to see a decline in demand and lower prices. Even the banks, their increases in rates are at the margin, and even though they act to flatten housing market activity, there's certainly no sense of a steep decline. We'll speak about that in a sec. So the housing bubble, it's fake news, it's fake property news. It has been for decades and it will be into the future. As I said, the only clear pathway for a perceived bubble bursting event would be a very sharp increase in interest rates, and we've never had that type of a scenario, even through our periods of very sharp increases in rates and declines in economic activity. So if we sort of go to the next, so we also have another a mysterious thing, that a mysterious outcome that's been, I guess, a very popular topic of conversation, and that's unit oversupply. I've never been an advocate or a supporter of the notion that that we're heading for some apartment glut in our major capital city markets. I think that's becoming very evident now that the unit oversupply concerns are very much misplaced, and that our markets, where we have had significant growth in apartment development, which of course is Melbourne, Sydney, and Brisbane, and now we're starting to see the reality of a continuance of undersupplied markets, and I'll talk about that later. But certainly the issue with oversupply, and we're seeing restrictions on foreign investors, foreign developers, as well as domestic investors, these issues are based on, or these policy solutions, so-called, are based on a sense of providing, offsetting this supposed unit oversupply. And as I said, we're clearly seeing now that the Sydney market remains undersupplied. We're seeing the Melbourne market also no real sign of an apartment glut there. And there's also some early signs that the Brisbane market, which certainly has had supply move ahead of demand, is also now starting to quickly soak up available stock. So we'll talk through that shortly. But that's the general theme here. Is I think we've got to look at the issues that would cause investors and property owners concern in terms of, I guess, the narrative of what we have in almost accepted as the nature of our housing markets. But in fact, the reality is they remain remarkably stable and resilient.
So in our next segment, I'm going to talk to you about granny flats and how this can be a potential dual income strategy. So granny flats are a self-contained dwelling located on the same block of land to a main dwelling. And granny flats will have their own entrance, kitchen, bathroom, bedroom and laundry. And it allows a homeowner or an investor to receive a second income off their property, which may actually turn a negatively geared property into a positive one. Now, they are generally freestanding and good layouts will ensure that they have a separate and unobstructed pedestrian access, so tenants from each dwelling won't cross paths. Granny flats generally will perform better the closer you are to the city centre due to the higher density population, and $100,000 is often quoted as a starting point for the cost of building a granny flat. Now, today I'm very lucky to be joined by real estate investors James Lawrence, who has experience in managing a granny flat. So, James, welcome along. Thank you so much for your time.
Thanks, Dennis. Great to be here.
And so, James, can you tell us a little bit about your experience in why you've decided to choose granny flats as a strategy?
Absolutely. So in terms of choosing the granny flat strategy, it was largely due to the stage I was at in my life at the time and in my property investment journey. So I was searching for a property that could provide additional space for relatives or visiting friends. I am from the UK, so I do tend to get a lot of visitors who come to see us looking to escape the colder months, which, to be honest, is the majority of the time over there. And as a result, I do get a lot of visitors.
So do they come to see you or just to escape the cold?
Well, you would need to ask them that, Dennis.
Well, I might do that. Sorry, go on.
Thanks. So the second main consideration was obviously the potential to provide an additional income stream for us. We were planning to start a family.
And how'd that go?
Successfully, thank you. Yes.
Excellent.
So the potential to live in the primary dwelling and rent out the granny flat was very appealing to us, given that my partner would need to take a break from her career to look after our children.
And so was the initial cost a consideration for you?
It was, and talking generally, granny flats can be a cheaper investment than buying another standalone property when you take into account purchasing costs like stamp duty, conveyancing, etc. So as a quick caveat, obviously all investors should look at more than just the price and do a full cash flow and growth forecast and analysis. But if the numbers do stack up, granny flats can provide that additional extra income stream for you.
So what about the potential to add value?
Absolutely. So if you're planning to build a granny flat, that they can add value to your property, especially if your block of land is close to the CBD. Land tends to be worth more the closer you are to the CBD, and so by having an additional bedroom and bathroom and so on, it can increase the value of your property significantly. Just be aware of not overcapitalizing, because...
And so, James, just for our new investors, what is overcapitalizing?
So put simply, overcapitalization is when the cost of your renovations, or in this case, building the granny flat, would outweigh how much value it's going to add.
Okay.
So my tip there would be to think strategically, keep a long-term view of your investment, and wherever possible, look for recent comparable sales of similar properties once your improvements are complete. So this way you can get an accurate estimation of how much your newly improved property could potentially be worth. And finally, I think granny flats can give you good flexibility in terms of your rental options both now and in the future. For example, you can rent out the property with a standard 6 or 12-month contract and potentially save on the property management costs if you choose not to use a letting agent. Given that you will be living in close proximity to your tenant or tenants, you may find that you can handle the rent collection, maintenance and repairs yourself, saving the approximate 6% commission costs. And whilst we're talking about flexibility, the rise of websites like Airbnb or Stays help open up the short-term holiday let market for you, particularly if you happen to live close to the beach or the CBD, where the demand's likely to be higher and people need that short-term accommodation. And just finally, to finish up, I think if you are thinking long-term and using property as a vehicle to provide long-term wealth now and for your retirement, having the option to rent out the granny flat or perhaps even live in it and rent out the main dwelling in the future can provide you that extra flexibility and income stream as you enter your retirement and progress through your life.
Yeah, so look, definitely some great benefits from investing in a granny flat, but as with all forms of investments, there are risks that we should all consider. So from your experience, are there any drawbacks that you wanted to share with our audience?
Yes, I think the first one to consider would be the potential of having difficult tenants. And obviously, if you're living in close proximity with your tenant, any potential problems can seem worse. And this really highlights the importance of having a stringent tenant selection process. Choose your target demographic really carefully. So put simply, who's going to be living in your granny flat, their age, what job they do, where they're at in their life. Get references if you're managing the tenant process yourself. And consider your own privacy. You could be sharing the same entrance and you will be living in close proximity with your tenant, so be aware of that and how it's something that you and your family are going to have to contend with. And finally, granny flats can't be on a separate title, so they can't be sold separately, and there's usually little or no depreciation on an older primary building, so bear that in mind when tax time comes around and you're looking to put in your depreciation schedule to help boost your cash flow.
Yeah, so look, definitely some risks that, if you are looking at considering granny flats as a strategy to consider. And if you are deciding that you want to go ahead and pursue with this strategy as an option, the first question that you'll need to answer is, are you allowed to build one? Just remember that each council will have different rules and guidelines, and in most cases, a development application is required through your local council. In addition to that, there are different rules in different states as well. For example, in Victoria, a granny flat can only be rented to a person that is dependent on a resident of the main dwelling. So really, really important to understand that, and you should be able to visit your local state government state website to find out more information on what those regulations are. Now, all granny flats must comply with both the Building Code of Australia and any relevant Australian standards. So if you are looking at building a granny flat, what I would recommend is that you contact a custom granny flat supplier, and you should be able to obtain some ballpark costs. But if you're looking at acquiring an existing property that already has a granny flat in place, you can definitely do that by utilising the investor search tool from the Real Estate Investor Pro membership to help you find those potential deals. Now, each podcast, we will give you a summary of the main property and economic news. This week, the RBA kept the cash rate on hold in June at 1.5%. And here is a summary of a statement from Governor Philip Lowe. Domestically, the transition to lower levels of mining investment following the mining investment boom is almost complete. Business conditions have improved and economic growth is still expected to increase gradually over the next couple of years to a little above 3%. Indicators of the labour market remain mixed. Employment growth has been stronger over recent months, although growth in total hours worked remains weak. The various forward-looking indicators point to continued growth in employment over the period ahead. Conditions in the housing market vary considerably around the country. Prices have been rising briskly in some markets, although there are some signs that these conditions are starting to ease. In other markets, prices are declining. In the eastern capital cities, a considerable additional supply of apartments is scheduled to come on stream over the next couple of years. Lenders have also announced increases in mortgage rates, particularly those paid by investors and on interest-only loans. Now, for a full statement, you can check out our blog at blog.realestateinvestor.com.au. Well, that's it for our very first property investing podcast. Thank you so much for listening, and I hope you found the information useful. I want to also take the opportunity to thank James Lawrence for giving us some insights into his experience with Granny Flats, and of course, Dr. Andrew Wilson as well. Just to let you know, we are running a special promotion, so all our podcast listeners qualify for a free property investing strategy session. To book yours, go to our website, realestateinvestor.com.au, and click on the banner at the top of the page. We really can't wait to talk to you about your property investing goals. Now, I hope you can tune into our next episode where I'll be covering the recent federal budget changes and how these will affect future depreciation claims. I'll talk about discount as a strategy and also our top 10 tips for brand new investors. So until then, take care and I'll catch you next time.